by law, and that is by the regulation under our public procurement, there are requirements for contractors in order for them to engage or work with government. And these requirements are where now the bank comes in to support. The requirements for any job, most jobs of government, start with you pitching for the job. Pitching for the job for most government contracts requires that you provide an instrument which we call a bid or tender guarantee. Now that instrument at least gives some level of commitment on behalf of the potential supplier, that in the event they win, they at least have the capability to progress to the execution stage. Now you can't get that guarantee from anywhere apart from a financial institution. And for the most part, usually it will be banks. Occasionally you find insurance companies provide that instrument, but insurance companies are also under the category of financial institutions. So you win that particular pitch, if I can put it that way, or tender. There's another requirement that for most government jobs and even other non-government employers have, and that is for you to commit a certain level of your performance or to guarantee. Yeah, I'm trying to move away from the guarantee word because that's what the instrument is, or that document. And they will need at least minimum 5 to 10% of the value of the contract as your commitment that you can do that job. In the event you fail, then whoever has issued that commitment on your behalf will pay for the value of that particular commitment. And this is normally in the form of performance guarantees. Now, KCB Bank, we do provide the bid or tender guarantees. We can support you with the performance guarantees. For performance guarantees, we don't require 100% security or cover. What we work with is 40%. If we are comfortable enough based on the information you provide that we can stand behind you and issue that guarantee on your behalf. Now, for some employers, especially government, there is a provision for some advance funds to be given to you to support you with commencement of works or with continuation of works. And this is normally, if that provision is there, will require that for whatever you're going to be given by that employer, you fully secure it, so that in the event you do not use that money for the intended purpose, then that money is refunded back. Now that is in the form, that particular commitment, or should I say warranty, is in the form of an advance payment guarantee, which now for that particular one, you'll find it's always banks that will provide it. Yeah. The last bit when it comes to contracts, which if there's a provision, if your employer allows, will be in the form of the warranty guarantee. Now, when all of us buy electronic gadgets, most of them for the most part have a given warranty period, so that in the event in that period, 6, 12, for some of the contracts of government, even 2 years, what they call defects liability period. In the event there are any defects that have materialized, then the employer can at least cover fixing of those defects with the money that normally they would retain. Yeah, because for government, there's a particular portion that they'll retain, sometimes 5 to 10%. I think it's more common now, 5%. But that money for any contractor like yourself, you'd like to have it when you finish, when you complete your execution or supply of the goods or services. So what do we do as a bank? We come in again and stand in your place and tell you, let us give the guarantee to cover money that would have been paid to you after that defects period or warranty period, so that in the event they materialize, we pay. Now, of course, this will help any contractor be able to realize their money earlier than later, and of course go on do something else with that money. Now, the areas that most contractors are really interested in have to do now with how can I get money to actually execute on or perform on that contract. And that's where we get into what we call the funded space, where we actually give you, should I say hard cash or funds to execute. That can be in the form of either contract financing It's another word that is used interchangeably is LPO, or local purchase order financing. Then we can also finance your receivables. Yeah, the contract financing will help you execute the contract at whatever stage. By the way, you don't have to, should I say, have started, or because you can even come in at the time when midway the execution you run out of funds or you need funds. You probably are expecting payments from somewhere, they didn't come through. So we can come in and either give you then contract financing, meaning against the contract you're executing, or we can give you money against those receivables that you're expecting. Yeah. Now those receivables that you're expecting, it doesn't matter if there is no contract speaking to why you need the money now. No, you'd rather have maybe your money earlier than later. Yeah, in order for you to do other things. Yeah, so what do? We ask you for either the invoice, if you have delivered on a service invoice, or for especially construction works which require certifying of works at different phases, we ask you for that certificate of that confirms works executed. So we finance invoice discounting or certificate discounting, used interchangeably, finances receivables. Yeah. Now, let us not also forget the fact that when it comes now to certain areas of your contract execution, you might need to import certain goods or even services. When I say services, you might need expertise from abroad. Yeah. So what do we do? Even if it's not against a contract that you're executing, you need to import, because now we're getting into the realm of import financing. We can give you both the funded option, which can be in the form of letters of credit or other forms of guarantees. Yeah. Then, or else we can give you an import loan. Yeah. Now, we normally try and encourage our customers, especially if you have quite a long or what we call business cycle, from the time when you get your order to when you get paid, to work with the non-funded financing options, because then it helps increase, maximize your margins. I say that because the minute you start working with the funded option, it's interest that's going to be charged from the day we advance the funds. But for the non-funded option, yes, we'll charge you fees, but it's significantly much less in comparison, because you're looking at probably double-digit interest figures vis-a-vis single-digit fees that we'll charge. Now, I'm getting almost to the point that most people ask for how much are you going to charge me before even finishing what we can offer you. The import financing, the contractors, you're also in that space. It's not only for the traders who import goods for resale. It's not only for the manufacturers who import raw materials or semi-processed goods for finishing production and resale. It's not only for example, like now we have our fuel companies. The form of financing that would advance them, because they are technically importing, would be also in the form of import financing. And under trade finance, what we try and do as much as possible, it's prudent banking or financing to make sure that we address your full financing needs end to end. So when I'm engaging our customers, I always ask our colleagues, I encourage them to ask, what do you need in terms of full financing? You're going to import. Have you included the logistical costs like transportation? Have you included taxes? So that when we are financing you, we cover the full end. Now in there, don't forget, especially like for the importation or even locally, the machinery that you might finance. You need to make sure you work your numbers. Do the math. When I get this financing in this form, am I going to be under or above water? Am I going to make profit or not? Because that should be now the basis of your financing decision. Yeah. What sometimes customers will complain and say, but me, that's what I was offered. I asked for 100 million, they gave me only 50. If 50 is not going to work for you, then it's better you don't take it. Why? Because you're probably going to stop halfway and you'll have created another problem. You have an obligation you can't repay because you haven't completed.
We'll now take a very short commercial break. Man and Markets continues after this break.